Here's something fascinating. Did you know that just a handful of Vanguard ETFs have outperformed the market consistently, providing investors with stellar returns? In today's video, we'll dive into the top 5 Vanguard ETFs that every savvy investor should know about. With the Vanguard S&P 500 ETF, VOO, boasting an expense ratio of just 0.03% and covering the creme de la creme of the US stock market, it's no wonder this ETF is a favorite among investors. But that's just the beginning. We'll also explore the Vanguard Total Stock Market ETF, VTI, offering exposure to the entire US stock market, and the Vanguard FTSE All-World ex-US ETF, VEU, which opens doors to international markets. Whether you're interested in growth stocks with the Vanguard Growth ETF, VUG, or value stocks with the Vanguard Value ETF, VTV, these ETFs have something for everyone. Welcome to Satoshi Finance, where we break down complex finance topics to educate and empower you on your journey to financial freedom. Stick around to discover why these ETFs stand out and how they can supercharge your investment portfolio. First on our list is the Vanguard S&P 500 ETF. VOO is one of the most popular and widely held ETFs available today, and for good reason. This ETF is designed to track the performance of the S&P 500 index, which includes 500 of the largest and most influential companies in the United States. By investing in VOO, investors are essentially buying into a diversified portfolio of top-tier companies, spanning various sectors such as technology, healthcare, financial services, and consumer goods. This broad exposure helps mitigate risk while providing opportunities for substantial growth, reflecting the overall health and performance of the U.S. economy. One of the standout features of the Vanguard S&P 500 ETF is its remarkably low expense ratio of just 0.03%. This means that for every $10,000 invested, the annual cost is only $3, making it an extremely cost-effective option for investors. Low fees are crucial in ensuring that more of your money stays invested and has the potential to grow over time. Additionally, VOO's low expense ratio is a testament to Vanguard's commitment to providing high-quality investment options at a minimal cost. This combination of broad market exposure and low cost makes VOO an attractive choice for both novice and experienced investors looking to build wealth over the long term. Next on our list is the Vanguard Total Stock Market ETF, VTI, offers investors a comprehensive way to gain exposure to the entire US stock market. Unlike more narrowly focused ETFs, VTI encompasses a broad spectrum of stocks, including small, mid, and large cap companies across various industries. This all-encompassing approach provides a well-rounded investment that captures the full range of growth and value opportunities present in the market. By holding VTI, investors essentially own a piece of thousands of US companies, giving them a diversified portfolio that can help reduce risk and enhance potential returns over the long term. One of the key advantages of the Vanguard Total Stock Market ETF is its incredibly low expense ratio of just 0.03%. This means investors only pay $3 annually for every $10,000 invested, which is among the lowest in the industry. Low fees are essential for maximizing net returns as they ensure that more of the investor's money remains invested and can compound over time. Vanguard's commitment to low costs, coupled with the extensive diversification offered by VTI, makes it an excellent choice for investors seeking a balanced and cost-efficient way to participate in the overall performance of the US stock market. If you've made it this far, consider taking a moment to subscribe to our channel. Subscribing is absolutely free, and you can always change your mind. We have a wealth of financial insights and exciting discussions lined up for you. Your support not only helps us reach a broader audience, but also motivates us to continue creating high-quality content that educates and empowers viewers like you. So, hit that subscribe button, stay tuned, and join us on this journey towards financial empowerment. Thank you for being a part of our community. The Vanguard FTSE All-World ex-US ETF, VEU, provides investors with a unique opportunity to diversify their portfolios beyond the US market. This ETF tracks the performance of the FTSE All-World ex-US Index, which includes a vast array of stocks from both developed and emerging markets around the globe. By investing in VEU, investors can gain exposure to international markets such as Europe, Asia, and Latin America, encompassing a wide range of industries and sectors. This global diversification helps mitigate the risk associated with being too heavily invested in a single country's economy and allows investors to take advantage of growth opportunities in various regions. One of the notable features of the Vanguard FTSE All-World ex-US ETF is its expense ratio of 0.07%, which is remarkably low given the fund's broad international exposure. This low cost is crucial for long-term investors, as it ensures that a larger portion of their investment remains in the fund, compounding over time. The ETF's comprehensive coverage of global markets, combined with Vanguard's reputation for low fees, makes VEU an attractive option for investors seeking to enhance their portfolios with international diversification. Whether aiming to capture growth in emerging markets or stability in developed economies, VEU provides a balanced and efficient way to invest in the global stock market outside the US. The Vanguard Growth ETF is a compelling choice for investors seeking exposure to US large-cap growth stocks. This ETF is designed to track the performance of the CRSP US Large Cap Growth Index, which includes companies that exhibit strong growth potential based on factors such as revenue, earnings, and market share. By focusing on large-cap growth stocks, VUG provides access to well-established companies that are expected to grow at an above-average rate compared to other large-cap stocks. This can include tech giants, innovative healthcare firms, and other industry leaders known for their robust expansion strategies and market influence. One of the standout features of the Vanguard Growth ETF is its low expense ratio of just 0.04%. This means investors only pay $4 annually for every $10,000 invested, making it a cost-effective option for those looking to capitalize on the growth potential of large-cap stocks. Low fees are essential for maximizing investment returns, as they reduce the drag on performance over time. Additionally, VUG's emphasis on growth-oriented companies can lead to substantial capital appreciation, particularly during bullish market conditions. For investors with a higher risk tolerance and a focus on long-term growth, the Vanguard Growth ETF offers a strategic way to tap into the dynamic and potentially lucrative segment of large-cap growth stocks. The Vanguard Value ETF, VTV, is a prime option for investors aiming to focus on U.S. large-cap value stocks. This ETF tracks the performance of the CRSP US Large Cap Value Index, which includes companies that are considered undervalued relative to the broader market. These value stocks often have solid fundamentals, such as strong earnings and dividends, but are priced lower than their intrinsic worth. By investing in VTV, investors gain exposure to a portfolio of well-established companies across various sectors that have the potential for stable growth and income generation. One of the key benefits of the Vanguard Value ETF is its low expense ratio of just 0.04%. This minimal cost ensures that a larger portion of investors' money remains invested, which can significantly enhance long-term returns. The focus on value stocks provides a counterbalance to the high volatility often associated with growth stocks. Value stocks tend to perform well during economic recoveries and periods of market stability, offering a degree of resilience against market downturns. For investors seeking a conservative approach with the potential for steady returns, the Vanguard Value ETF presents a compelling choice, combining cost efficiency with exposure to high-quality, undervalued large-cap stocks. In conclusion, we've explored 5 of the best Vanguard ETFs that can provide a robust foundation for any investment portfolio, starting with the Vanguard S&P 500 ETF, VOO, which offers exposure to 500 of the largest U.S. companies with an impressively low expense ratio of 0.03%. We then moved on to the Vanguard Total Stock Market ETF, VTI, covering the entire U.S. stock market and offering a diversified mix of small, mid, and large-cap stocks. The Vanguard FTSE All-World ex-US ETF, VEU, brought international diversification to the table, giving investors access to both developed and emerging markets around the globe. For those interested in growth opportunities, the Vanguard Growth ETF, VUG, focuses on U.S. large-cap growth stocks with a competitive expense ratio of 0.04%. Lastly, the Vanguard Value ETF, VTV, targets U.S. large-cap value stocks, offering a strategic way to invest in undervalued companies with solid fundamentals, also at a 0.04% expense ratio. As we've seen, each of these ETFs offers unique advantages and can play a vital role in a well-rounded investment strategy. However, it's crucial to remember that investing always comes with risks, and what works for one person might not work for another. I encourage you to conduct your own research and consider your individual financial goals and risk tolerance before making any investment decisions. Diversifying your portfolio with a mix of these ETFs can provide both growth potential and stability. but always make sure you are comfortable with your investment choices. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to our channel for more insightful content, and hit that notification bell so you never miss an update. Thanks again for watching, and I'll catch you in the next video.